Today, folks, us peasants, in the virtue of financial independence to perhaps one day retire early, our journeys through the looking glass into this economic tariff war, clawing for any certainty that existed, hopes that our portfolios will recover, hopes that we're finding a bottom here, though many of you are speculating the bottoms are not in. I'm here to tell you we do have a little bit of certainty as people start figuring out how they're navigating this new chessboard, and people like China, places like China, have now decided that they're going to start buying Canadian oil, bolstering the entire Canadian economy as we see oil stocks recover, offering those juicy dividends, and now capital gains back to almost all-time highs, especially with companies like Enbridge. We got to discuss, but we've also got earnings coming out that are giving some transparency and some further uncertainty when it comes to the chip makers like ASML that, basically bolstered saying, hey, yeah, we had great earnings, but we're still seeing consumer shifting in our consumers because they sell the major machines that make the chips. These are $100 million machines. So if there's a 15% tariff, 10% tariff, wherever that's going, it is not a small fee to have to pay. Then we got to talk about Google, Meta, some of my largest holdings in my portfolio getting slaughtered yet again on the back of some of these monopoly fines, and some further news we'll discuss. So if you are on that path to financial independence, if you want to join me on that journey, folks, let's do this together. Let's ride through the extreme of the news that exists today by just hitting that subscribe and liking if you enjoy this kind of content. Because firstly, China pivots from the US to Canada for more oil as tariffs basically worsen. And apparently China refiners are importing record amounts of Canadian crude after slashing purchases of United States oil by roughly 90% amid escalating trade tensions. A pipeline expansion that happened in Western Canada that opened less than a year ago has presented China and other East Asian oil importers with expanded access to the vast crude reserves in Alberta's oil sand region. Now, China's crude imports from the port at the pipeline terminus near Vancouver soared to an unprecedented 7.3 million barrels in March and are on pace to exceed that figure this month, according to data from Vortexa, which tracks the waterborne oil and natural gas shipments. Meanwhile, China's imports of U.S. oil have collapsed to 3 million barrels a month, from a peak of 29 million in June. And you can kind of see the difference in line here, which is kind of incredible to think that Canada is like, hey, China, we're not that far away from boats, and we got that oil coming to the ports now. Maybe not the worst idea here, and it's really done well for the Toronto Stock Exchange. Actually, this news on the back of oil basically cratering. I mean, we've talked about oil prices really bringing down inflation and really cratering since the peaks of back in 2022. We're in a much better place, especially at the pumps now that they've gotten rid of carbon tax here in Canada. I mean, I can fill up my tank for like $35-40 now, which is incredible. But if we look at Enbridge here, I mean, this is an incredible stock. I mean, it's starting to bolster back toward its yearly highs. It's only like 2% off now. And man, what a rate of return over the last 5 years, with a dividend back here that was closer to 8-9%, I believe, in 2023. Whoever's been buying this has been making leaps and bounds of returns. Enbridge is the largest bloodline to North America. It controls most of the pipelines going from, Canada all the way down to Texas. Really incredible company that traded for reasonable values, but is continuing to justify some growth here for investors. CNQ, however, Enbridge is a little bit more cushioned toward the oil prices, whereas Canadian Natural is a direct exporter of natural gas and oil, so they're feeling the pressure a bit. It's why the stock's down 30%. It's why I've been concerned over pressures on some of the Canadian stocks or the Canadian ETFs, because energy is a huge sector allocation to Canada's economy. So if oil goes down, typically the whole sector goes with it. But time will tell as we get into earnings and what forecasts are going to start looking like. On the Canadian banking sector side of things, however, as we head toward Canadian bank earnings, I'm getting a little bit more confident the earnings are going to continue to be well, at least I hope. I know Canada's cut interest rates, so we'll see if that's affecting some of the interest income on these Canadian banks, or if they're using that money to put it into U.S. treasuries or U.S. money market funds to keep bolstering that 4.5-5% return off those interest rates that haven't been cut in the United States. Because, man, the U.S. banks posted some pretty reasonable earnings, but a lot of it's driven by interest income and continued investment and like trading volume, because a lot of people are investing through this volatility. So it'll be neat to see, but I still think the banks are trading at a relative discount. I do like the Globe X Equal Weight Bank ETF, and it's trading like 10% off its highs, and it just kind of like Pokemon cards, collecting them all, encompasses all the Canadian banks. If we look at comparably, though, the Canadian markets, the S&P TSX is only down 2.68% year to date, and over the last year are up 11, almost 12%, comparably to the S&P 500 that's down almost 10% year to date and is only up about 6% over the last year. It's incredible to think that the Canadian economy has actually been a more resilient investment over the last year, a place to cost average. If you look at the Canadian dollar as well, it is starting to rally back as Trump has basically been deteriorating the US dollar. And if you look at the last 5 days, I mean, the Canadian dollar's jumped up by almost 1% from the lows. From the last month here, from peak to trough, we're up about 4%. So, yeah, it's incredible to think that the US dollar, that had this crazy supremacy with the higher interest rates, is now just deteriorating on the back of Trump's tariff war, literally deteriorating international trade values, which arguably should help, with the inflationary pressures, because it allowed international trade to be cheaper for anyone buying in US dollars. But now, with the deteriorating US dollar, the tariff import rates, it's actually deteriorating any international trade it's really hurting. I mean, it's going to drive some inflationary pressures for sure. But that's a complicated topic in and of itself that we're not going to dive too deeply in today. I just want to talk about the face effects that we're seeing on companies, and we're going to get to see that. I'm really excited to see earnings next week. I think this is where we're going to get the big companies that are going to be posting, whether it be Tesla, some companies that actually have some international trade that I'm sure will come up in the discussions, especially with how close Elon is tied to Trump, and maybe people will ask him. I'm going to listen to this earnings call. It'll be one of the most interesting, especially considering I hate the current rhetoric around Tesla being like, all these big investors we don't care about the cars anymore. We just care about the robotics. The robotics is the future. But if you're going to account for executional skills, Tesla's done a horrible job executing on their auto industry, considering BYD is now further surpassing them, and not only by cheaper valuations. Like, BYD is growing at an exceptional rate, trading for much better valuation. Does it have robotics? No, but at least it can prove that it can actually build manufacturing and build solid vehicles at a multitude of price rates and enter multitudes of markets and find success all over the place, that Tesla's continuing to struggle in on the back of their geopolitics and their incredibly overvalued prices here, not justifying any of the growth today. But who knows? I'm hypercritical, but that's somebody that's made a lot of money off Tesla. That's somebody that believed in Tesla back in 2019 and held Tesla for quite some time and even traded it, through 2024. But God, I don't know where the company sits today, but we had ASML post, and ASML is the bread and butter right now to what is going on in the chip sector. There are arguments that I think some of these other companies have come out and stated that they've been able to make lithography machines that are just as good as what ASML is producing. I don't know how true that is, but ASML has been stating that there are some concerns amidst this tariff war, and they posted great numbers, which is crazy. But Dutch Semiconductor Equipment, ASML, the giant, on Wednesday missed order expectations and said that uncertainty from the U.S. trade restrictions may affect demand for its critical chip-making machines. But net sales came in at $7.74 billion. Expectations were 7.8. Net profit 2.36 versus 2.3 expected. So better net profits, but net sales, came in at rough expectations. But I guess, hinting that, hey, when we're selling multi-$100 million machines, like, I think their base product is like $250 million, and you have to deal with a 10% tariff or whatever the tariff is. Yeah, I mean, 10% on $250 million is not a small chunk of change, right? So yeah, they kind of got hit on earnings, nothing crazy, but ASML, I think, is going to be one of the first companies to offer that concern. I think that's what we're going to see with Tesla. Any company dealing with international trade, I think it's going to be neat to hear what they have to say about it. Otherwise, my biggest investment should be cushioned against some of the tariff wars, but they're dealing with their own realities of monopolistic fines and what's going on in the U.S. with judgments against their own companies. This has nothing to do with international trade, but Google, man, is it looking juicy here? Down 26%, 19 PE. I'm not buying it because I obviously bought way too much of it. I own a lot of it. The wife owns a bunch of it. That's why we were buying Meta this last week. But yeah, you got to admit, the federal judge rules against Google in advertising antitrust case. And all they really want Google to do is break up some of their businesses. And people keep asking me about this. Am I concerned about this? Not really, because any fine they get, they're going to be able to pay regardless. My concern is if they split the company up, what aspects of the company are they going to want to split up? Because I've been hearing a bunch of different aspects of the business they should be splitting up, especially the government has stated that Google should sell off its Google Ad Manager, which includes the company's publisher ad server and its ad exchange, which seems insane to me. And to show you what the ad exchange kind of looks like, because I'm actually somebody that uses this. I understand how Google works. I understand the back end. I understand the marketing side of it, which I'm sure many people don't. But if I go into Google Ads to actually run an ad campaign where all these billions are generated, ideally, just to simplify this for you, I want to show you the amount of data that they're collecting and how simple this tool really is. Because you can do demographics by country, but what really makes me intrigued is if the deeper demographics, because I can choose by age, female, male. If you go into additional, I can actually choose whether you're a parent, not a parent. If you're in the top 10% of households, I can target the rich, the poor, anything you search. Like, when you go on and you're searching maybe a related topic, like, ooh, what's up with Meta stock today? I can make take it. So like I'm the top search of that, right? So stocks to buy, let's say, if that's what you're after, I can see what people are actually searching and make sure my videos come up at the top. That's why usually when you see those top sponsored videos, that's what's actually coming up at the top, are people that are targeting those search words. Yeah, there's a lot you can do here with placements and topics, all kinds of stuff. But yeah, it's neat to think that this is the whole machine behind exactly how Google makes all of its money. And yeah, I hope they don't break it up. But if they do, I'm sure what they're going to make Google split up is going to be, if they do, is going to be interesting for the value of Google. Because regardless if they sever the company off, anything they sever off is going to be another Fortune 500 company. It's kind of like Apple's AirPod business. Like Apple could sever off any aspect of its business, and that business standalone would be worth probably more than it is under the umbrella, because then the market can capitalize on it, and it would be a whole separate company. So I actually think this is better for these companies, or for us as shareholders, because then we get spun off shares into extended companies that are all highly valued, because if Google owns it, it's a highly valued company in my opinion. So it'll be neat to see, especially too with Meta. All these mega caps have been dealing with this for eons. This isn't something new by any metric when it comes to these fines. But Meta recently saw a whistleblower come out saying tech giant built $18 billion business by aiding China in the AI race, and basically undermining the U.S. national security, which I don't think is true by any metric. I listened to this, and realistically, Meta wanting to work in China is brilliant in my opinion. But yeah, that means they're going to have to make servers there. They're going to have to market to what the Chinese governments expect them to basically market to, and follow those rules and regulations. But to me, I'm like, these companies already sell all of our data. They already know everything about us. They are already doing maniacal things, as I just showed you. So people know what we're worth, for crying out loud, so they can market to us. And you're worried about them going to China and marketing, and like, what? Who cares? As long as they're not, like, again, giving up all this like U.S. marketing. That's why I'm confused. Is it just like allowing Chinese people to market to U.S. people by giving them this data? I don't know. Honestly, these companies are nefarious as it is, but they're money printing machines. Which is why I appreciate them, because I use them relentlessly, and I think it's fascinating how they operate. Temu, if you know Temu, is like the new Alibaba on like, there's always like a new pop-up of Chinese business selling cheap Chinese products. I don't know if they're considered cheap anymore, because with all the Chinese manufacturers coming on TikTok showing you how Birkin and all these bags are made, or these purses, and they're undermining those companies. Who knows if it's cheap products anymore? But Temo's cutting ad spending apparently, and I've seen them come up a lot, and they've been a huge ad spender on Google, or on Meta, on Facebook, and all these different platforms. What was the last one? I think it was Wish. Wish was the last big one, and now it's Temu. I always see like there's a rotating aspects of companies that really try and suck mad ad dollars into Google to get that conversion, but it converts apparently. So nonetheless, Zuck's been on trial for all this stuff as well, with recently talking about in the past of Instagram and WhatsApp breakup. I don't know. These companies are just vast. They're so vast, and there's so much going on with them. But I love them. It's why I hold them, and I'm going to continue to hold them. I still think they're cheap. They're the cheapest S&P top 10 companies. I mean, if Tesla can get away with the scrutiny that it's under and all the bullshit it's dealing with and still trade at 100 times multiple, it's insane to me that Meta and Google can't capture the smallest bit of upside on their future expectations. So I'll hold them until the market realizes that. And yeah, there could be some volatility if ad spending gets cut, but I really don't think it's materially going to be cut because of this tariff war. But who knows? I mean, we don't know until we see earnings, but I still think the next quarter earnings are going to be fine. I think it'll bolster the stocks a bit and continue to offer some grounding to the drop that we've experienced in the market. I could be wrong. These are just opinions of my own, but as always, I'll pass it off to you. I'd love to know what you think in that comment section below.